Welcome to the Asian Bankers Association and LexisNexis Risk Solutions webinar on global state of fraud and the Asian perspective. My name is Mig Moreno. I'm the Deputy Secretary Treasurer of the Asian Bankers Association, and I will be the moderator of this session today. Let me start the conversation with the idea that right now in Asia, we have an increasingly complex and dangerous risk environment for banks. Especially new payment systems are increasing the speed of global transactions, shortening the time frame for risk teams to detect, address, and correct and solve these problems. Organized crime is thriving in this situation, and we need time reduction to assess these problems. For this reason, this webinar, I think, would be very interesting for all bankers. And LexisNexis is one of the leading companies providing this kind of services and solutions. And we are very glad to have them as an associate member in the Asian Bankers Association. So now, without much delay, I want to introduce the presenter of today's webinar. His name is Tai Vo, and he's the Director of Marketing Planning, Fraud and Identity, APAC Asia Pacific for LexisNexis Risk Solutions. Now, let me introduce some words about him so you have an idea of his professional background. Prior to joining LexisNexis, he worked at a leading consulting company in many consulting companies focusing in Asia in the compliance and digital fraud areas. He has more than 19 years of experience in the business and leading in the transformation and the risk consulting of these solutions. He has worked in multiple areas, and including business development, customer success, strategy formulation, product management, and execution of projects. So now, without further ado, I would like to introduce my friend Tai Vo to say a few words and then go with the presentation. Then, after his presentation, we'll have a panel discussion with two experts. One is Elke Biechele. She's the CEO of RisikoTek. And also, we have another expert from HSBC, Vincy Leung, who is the head of fraud analytics at the HSBC. Later on, I will introduce you more details about them. So now, without much delay, Tai Vo, is your turn.
All right. Thanks, Mick. Let me do a quick projection of the screen. My name is Thanh Tai Vo, or Thai in the short form, and I'm part of the fraud and identity market planning team that looks after the market and product strategy for the APAC region. In the first part of this webinar, I will highlight 7 key fraud trends from our recent research, the LexisNexis Risk Solutions Global State of Fraud and Identity Report, and add a bit of flavor from the Asian perspective. Vincy Leung and Elke Biechele will join me in an engaging panel discussion later that will be moderated by Mig Moreno. I will cover 2 main topics in the first part of the webinar, key highlights from the LexisNexis Risk Solutions Global State Fraud and Identity Report, and how businesses can fight back with a multi-layer approach. The report contains a mix of unpublished and published findings from our proprietary research and analysis, including LexisNexis True Cost of Fraud Study, a global survey of almost 1,200 decision makers, and LexisNexis Risk Solutions Cybercrime Report that we publish yearly, analyzing online user interactions and attack patterns from over 100 billion global online transactions. Just a quick introduction about LexisNexis Risk Solutions. We are part of RELEX that also operates businesses in 3 other key areas: legal, exhibitions, and publications. We have offices in key locations in APAC with over 400 staff. Today's focus will be on the fraud and identity areas, but we also help clients in the areas of financial crime compliance and payment efficiency. We have built expertise across the globe over 50 years. We work with 5 of the top 10 e-commerce sites, 9 of the top 10 banks, over 140 payment-related organizations, top 10 gaming operators, and with the most visited streaming service. So let's go into the highlights. Businesses today face an increasing complex and evolving risk environment. Real-time identity verifications is necessary for any competitive business, but it's becoming harder and harder for a thinly stretched human team to assess. At at the same time, new payment channels are dramatically increasing the speed of global transactions, shortening the time frame for risk team to address issues. From our research and insight from from our digital identity network, we have observed 7 key fraud trends, and I will highlight them in the next few minutes. First-party fraud has doubled in the last year, complicating risk management challenges. The dark web has evolved into a comprehensive fraud-as-a-service marketplace for criminals. Money mules are enablers of fraud in the digital space, but their behavior is exposing them to risk team. Leaning into modern identity, complexity is enabling the rise of multi-dimensional identity intelligence. Digital payment are bringing speed and convenience to consumers. The battle between good versus bad AI is turning into an arms race. And lastly, the seventh trend is data collaboration help companies amplify anti-fraud efforts. So let's go into the first trend. First-party fraud is escalating faster than most organizations anticipated, exposing weaknesses in conventional risk framework. As businesses have strengthened their fraud defenses against external threats, a growing share of fraud now originates inside the customer base or at account origination. So the question is, why do good customers go bad? Partially, outdated fraud detection tools struggle to accurately identify these types of fraud, forcing businesses into reactive posture instead of a strategic one. Also, first-party fraud is tied to economics and the increased cost of living. When you have money problem, you are more likely to respond to new recruitment adverts or take loans without any intention to repay. First-party fraud manifests in multiple forms, including account burst out, customer authentic identity to build trust, then default across multiple accounts. Refund and chargeback abuse, customers exploit lenient return policy and claim false non-receipt. Promotion and bonus abuse, individual leverage fake data to extract unearned rewards, and unwitting mule activities. Customers become conduits for laundering stolen funds. First-party fraud isn't limited to banking. It occurs across a variety of industry, accounting for more than a third of e-commerce fraud, for example. Because first-party fraud often masquerades as third-party fraud or synthetic identity activity, many organizations underestimate its scale and risks. Every step taken to reduce risk adds frictions for honest customers, but every leniency invites abuse by less than scrupulous customers. So the challenge for institutions is getting the balance right. First-party fraud is a behavior that spans all generations. From our research, we observe that younger generations generally have higher risk profiles. The insights from our research and data analysis are consistent with the results from the LexisNexis True Cost of Fraud study last year. Respondents indicated that first-party fraud resulted in the highest fraud losses. For APAC, that was 20% of the respondents. When we combine this with subcategories that are linked to first-party fraud, such as fraudulent refund and mule activity, losses that are associated with first-party fraud amounted to around 50% of the losses. And it is consistent across all regions. So let's look at trend number 2. The second trend is the dark web has become a shockingly comprehensive fraud resource. On today's dark web, fraudsters shop confidently and anonymously. Example of offering by content types and items that are for sale or provided for illustrative purposes only. Many dark websites require an administrative invitation, but often once inside, fraudsters typically find an oddly familiar customer-centric world of product description, shipping method, rating, and so on. Last year, account takeover accounted for more than 1 in every 4 fraudulent attacks. Part of why fraudsters have grown to adapt this particular method of attack is thanks to the step-by-step support they can count on from the dark web, including knowledge and techniques that are being shared between fraud syndicates. Businesses can counteract any advantages the dark web gives fraudsters in 5 key ways. Stop fraudsters with deepfake detections and robust KYC checks. Real-time biometrics, document authentication, and behavioral intelligence are difficult and expensive for fraudsters to defeat. Exploit fraudsters' reliance on unused identity and devices, so-called virgin phone numbers, unused email addresses, and devices with no prior digital footprints, or a powerful weapon in the fraudster's arsenal. Fraud analytics and device fingerprinting can flag this for extra scrutiny in real time. Thirdly, increased visibility around insider threats. Criminals often have accomplices inside organizations who can help them bypass security measures. The fourth one is monitor and threat landscape, constantly for change. Organized crime is well-funded and innovative and gains advantage when they work together. But legitimate businesses can work together as well, staying ahead of emerging threats by joining forces and sharing fraud intelligence. And lastly, protect customer account takeover. Businesses can do more to secure confidential information from illegal access and frustrate fraudsters with global device-based analytics, advanced user profile, and risk-based authentication. So moving on to the trend number 3. Organized mule network have been outpacing fraud teams for years, and it has been costing financial institutions billions every year. The average mule network consists of 15 mule moving money between 3.4 banks on average, though some are substantially larger, containing hundreds of mules. Generally, there are 3 categories of money mules. Complicit mules, these are willing participants who open or use accounts to launder illicit funds. Recruited mules, these are coerced, paid, or forced to use their legitimate accounts for mule activities. And the third one is what we call exploited mule, unwitting participants who don't realize their accounts are being misused. Often, these exploited mules are linked to other types of scams, such as romance scams. In APAC, in regions like Hong Kong and Singapore, mule networks increasingly exploit crypto exchanges to move funds. A recent crackdown in Hong Kong dismantled a fraud ring that laundered 180 million Hong Kong dollars through cryptocurrency and more than 500 mule accounts. Last year, we conducted a webinar focused on money mules in collaboration with the Asian Bankers Association, and the recording is available upon request. This visualization shows mule activities linked by digital identity connected to organizations operating in Southeast Asia in the first quarter of last year. Each arrow illustrates the digital identity associated with confirmed mule activity at one organization crossing over to another organization within our digital identity network. A thicker line denotes a higher volume of attacks. As highlighted earlier, criminals often use crypto exchanges to cash out. In a recent analysis we conducted for a bank in Southeast Asia, we uncovered extensive mule network. Analyzing and monitoring about 5% of the digital traffic, we uncovered 209 accounts that were associated with confirmed mule activities involving more than 2,500 devices in 22 countries. And this mule network made more than 130,000 transfers involving more than 1,700 beneficiaries, with a total value of close to $5 million. More banks are now sharing risk intelligence to alert one another to imminent threats. When mule-linked activity is detected in one institution, API-driven alerts can instantly notify other members, enabling them to act fast, limit exposure, and reduce risk. Such collaborations is enabling banks to target not only the first mule in the chain, but also many links that come after. Moving on to the fourth trend. Fast and reliable identity verification is the challenge of our times. To be competitive, companies need to meet customer expectations of low frictions while keeping accounts safe from fraudsters and staying compliant with regulations. Businesses face three identity complexity. Challenge one is efficiently onboarding new emerging identities. Digitally fluent younger generation and new to country immigrants can be attractive prospects for rapidly expanding company, but may lack traditional data like credit history. Onboarding this emerging identity can require company to find alternative data sources that can fill in the gaps. The second challenge is safely reducing customer frictions at onboarding. As discussed earlier in the part of this webinar, balancing risk and customer experience remain a challenge for many organizations. And the third challenge is verifying age while preserving privacy. Online sites with sensitive material or age restricted goods can struggle to block out people who should not be accessing them without capturing their private information and putting them at risk. But every initiative that reduces friction for customers has the potential to make life easier for criminals too. And companies in different industries may have varying risk assessment strategy. For instance, a gaming company, the main goal is to keep account opening friction low to stimulate growth, but increase security on withdrawal to safeguard assets. An investment bank, the goal is slightly different, and the banks apply heightened security on account opening, then reduce frictions when for these carefully authenticated customers as they transact later on. From the LexisNexis True Cost of Fraud study, respondents in APAC indicated that the rise of synthetic identity, 51%, and limited ability to confirm customer geographic and device location, also 51%, were the key challenges last year. The fifth trend is related to the boom in different payment methods. Innovative payment systems have spread around the globe, speeding up transactions and transforming consumers' expectations. Also, cross-border payment have been made easier. In the past, you might have to wait a few days for your transfer to be clear. With the introduction of instant payment between some countries, international transfer happens in real time. And criminal networks capitalize on this new payment method at lightning speed. For businesses with consumer transacting across multiple channels, that means joining the dots internally as well as tapping into global risk intelligence across the world's growing accepted payment methods. In a typical transfer, the bank risk assesses the customer, in this case, the sender of the funds, when a transfer is initiated. But equally, it's important to get insight into the beneficiary. For instance, if the beneficiary has been marked as a mule or scam account in our digital identity network, the bank could hold the transactions even if the sender is not aware that they are being scammed. Moreover, increasingly, banks are also screening inbound payment to prevent mule activities coming into the network. Mules and scammers use a variety of techniques to mask their presence. Therefore, banks leverage multiple risk signals to better risk assess the association between the two transacting parties, the sender and the beneficiary. For instance, looking at payment velocity, locations, and device anomaly, looking at example like account activities, drainage, and so on, digital intelligence and fraud marking, but also detecting behavioral anomalies and the presence of remote access to and active call during transactions. I've shared a new network in an earlier diagram. We now look at the fraud network operating in Southeast Asia in the first quarter of last year. One aspect stands out is the large volume of attacks originating from the payment service provider against an online travel agents. Cybercriminals are testing stolen credit card, and if successful, using stolen credit card to make fraudulent travel booking is a common fraud scenario. Moving on to trend number 6, the rise of artificial intelligence or AI, particularly generative AI, has created many conversations, but also concern. The hype that surrounds us says AI is going to transform everything, but will that transformation deliver benefit or harm? Some takeaways from our research: more than a third of fraudulent attacks in the past year involved generative AI, a sharp increase from 20% the year before. 85% of identity fraud cases involve generative AI tools. A recent survey revealed that people correctly spot deepfake just 20% of the time. In 2021, virtually no forged documents were generated by AI. In 2024, AI-generated forgery were involved in 57% of the attacks. Looking into our digital identity network, we observed as of May last year that 68% of attempted fraud involved digitally generated or manipulated identity artifacts in onboarding touchpoint in IDverse. Liveness attacks are evolving with real-time overlay and hijacking now the most common techniques. And organizations are already rethinking if their current technology can cope with evolving threat in online fraud. From our true cost of fraud study, 56% of respondents in APAC indicated that AI-powered capability in fraud detections is very important, and 24% indicated that it's extremely important. From the same study, 67% of respondents in APAC indicated that they use AI or machine learning to prevent first-party fraud is their top priority. First-party fraud, as we have seen earlier, is the key fraud trend that we have observed across the globe. Fraud can be analyzed in multiple ways. We can build specific AI models per event type, for example, new account opening, money muse, scam, account takeover, first-party fraud, and so on. Each model addresses a specific use case or fraud concern of the business. Or we can combine multiple models per event type and analyze cases of sophisticated fraud whereby one model may not be able to cover all possible scenarios. While multi-model approach enable organizations to tackle more sophisticated fraud, including AI-enabled and authorized payment scam, it requires more resources and it can be data intensive. There are benefits to both approaches and depends on the priority of the organization and what it sees as the biggest fraud risk for its business. We're moving on to the last trends. Many organizations are beginning to share fraud intelligence with one another in the face of rising risk. Criminals have long profited from collaborations on a local, regional, and global scale through tactics like building highly professional crime organizations like scam centers that operate openly, trafficking data leaks and expertise openly on the dark web, moving stolen funds through vast international mule network until they are practically untraceable. But genuine organizations can gain advantages from working together too. Businesses can bridge gaps and share risk intelligence are mostly likely to detect risk early, respond faster, and keep customers safe. There are many forms organizations can work together, either in formal consortium, the top row in blue, or through discussions or sharing the best fraud fighting practices without a direct consortium agreement, the bottom row. Globally, APAC is leading this collaborative approach with 3 consortiums. In Japan with 7 members, in Hong Kong 5 members, so in Singapore 3 members, with ongoing discussion with other potential members. We are working to set up a banking consortium in Malaysia and the Philippines this year and a telco consortium in Australia. One of the biggest challenges in fraud prevention is how to analyze, link, and make sense of hundreds, if not thousands, of data attributes and signals that are registered from online events or transactions. And leveraging digital intelligence across different industries provide a unique 360-degree risk view of an online user. Using machine learning, we gain new insight and produce better outcomes that can scale with velocity, speed, and complexity. However, it's important to note that fraud analytics are not one size fits all. For instance, the risk signals associated with an account takeover are very different from authorized payment fraud. Detecting sophisticated fraud requires a more comprehensive, multi-layer approach, bringing together data, analytics, and a broad understanding of the evolving scam landscape. Successful results often involve connecting money flows analysis to digital intelligence to enable richer, multi-dimensional data analysis, using AI to optimize detection model that can extract multiple fraud and mule signatures out of the same data sets. Expanding data intelligence beyond a single organization viewed by collaborating through a fraud prevention consortium, and using AI to combat AI threats such as deepfake scams. Customer education is key. An organization can introduce targeted messaging that discuss scam scenario. While technology can go a long way to helping detect scam, it is one part of the community approach where businesses and law enforcement work together with the general public to succeed. And with that, I will hand it back to you, Mig, for the panel discussion.
Thank you very much, Tai Vo, for the presentation. We have many things here to discuss because the problems are big. AI is a solution, but also a problem. But at the same time, this initiative of collaborating among banks is give hope to see some kind of prevention and mechanism to address the problem even after it happens. Before we start the panel discussion, I would like to introduce more in detail these two experts so the audience can have an idea of the caliber of their participation. Elke Biechele is the CEO of RisikoTek. It's a Singapore-based company. She is the founder and the CEO of the company, an award-winning compliance and financial crime investigation firm. She has more than 20 years of experience in global finance and risk leadership, including working with as a global head of risk management in a major international bank. She has been featured in in television, in Australian television, as an expert of financial crime. And now in Singapore, she has been working with MAS, the Monetary Authority of Singapore. So I think she will bring a good perspective into this issue. Now, the third participant, the second panelist, is Vincy Leung. She's based in Hong Kong with HSBC. As I mentioned before, she is the head of fraud analytics and MI at HSBC. She brings a decade of experience in the financial crime sector, specializing in data analytics for the fraud prevention and AML. She's very passionate about using data to advance technologies into this area of problems. Currently, she plays a role in building a scalable and regional fraud detection strategy to safeguard customers from fraud. She has a long experience in compliance and the implementation of transaction monitoring strategies and risk rating models, among many other things related to fraud and transaction monitoring. Now, with this in mind, I think it's good that we start the conversation with some questions from the audience. I sent a message to the audience to start issuing questions, and I think we have one. And I tell the panelists that if they have a different opinion or maybe another perspective in the question, please free to intervene. But this question goes to Tai Vo first. It says, fraud is constantly evolving. What are the key fraud trends you are seeing in Asia? You mentioned that in your presentation, but please elaborate a little bit more. And do you observe significant differences of fraud cases among countries and regions?
Okay. Thanks for that question. Yes, so in addition to the 7 fraud trends that were highlighted, I would group them into basically 3 main themes: rising cost, evolving fraud trend, and regulatory drive. So if you look at the first one, is record losses, fraud losses have been reported in many countries in these regions. There are a few aspects to this observation. So those fraud losses obviously affect the consumers and the businesses, but also companies that have been slow in strengthening their fraud defenses find themselves in a situation that they have to catch up. In the meantime, of course, fraud landscape continue to evolve. And this brings me to the second point, is the introductions of an addition of commercial channels, new payment method, and instant payment bring new risk and have offers cyber criminals more ways to scam consumers and businesses. Social media is a fertile ground for scammers to get into contact with unsuspecting victims and also recruit money mules. Money mules play an increasingly important role in enabling scam through funneling of illicit proceeds through the financial system. And the third point is regulatory drive. Regulators have been more proactive in tackling online fraud. Until a few years ago, the guidelines were somewhat vague. For example, banks require to have fraud detection system in place. In recent years, we observe more granular and specific fraud requirements, such as so-called kill switches, cooldown period, dynamic authentication, and so on. And some regulators went a step further by imposing fines or for non-compliance or implemented scam liability sharing schemes.
Okay, good. I don't know, Elke, if you have a view there from Singapore also.
Yeah. So so from our perspective, we usually see the victim side since we're investigators of financial crime and fraud, and then we usually help them to try and claim some of the funds back. So we see the victim side, and we see it also globally. So many victims are in this region, and what we see as a trend is that they're usually like victims of the scam centers in Myanmar and in other places. We're facing 700,000 employees that are scamming, and they're reaching out to all parts in the world. So we are dealing with victims, for example, at the moment in Germany, Switzerland, and Austria, and other victims in Australia and in many parts of the world. What we see in trends is sort of in Asia, at least, thanks to you holding this presentation, there's a lot more awareness, I think, at least amongst sort of the banks and the corporate staff. But over there, I think it is less because the technology adoption isn't as fast. And so life is a lot more slow-paced, and people are still struggling, like Germany is still struggling with digitization and laying fiber optics cables at this point, what many other parts in the world had 20 years ago. And so the population is also more averse to using technology, whilst here sort of whole countries are on Facebook. The Ministry of Defense is on Facebook. And over there, it's more like the mainstream newspapers and so on. So people are caught a lot more off guard, and they don't know really how to deal with this. And you would be surprised what people fall for. So deepfakes, undiscovered and not even heard of. At one point, somebody in my very rural place said, "Oh, this is a conspiracy theory, is it?" And so she had never heard of deepfakes and AI-generated videos. And so I think so the origination of the crime is very strong in this region, and the targets is very strong in the other international region.
Yeah. How about you, Vincy? What do you see from Hong Kong, since you have a big operation there?
Yep. So, and I would say in maybe 2-3 years before, that is usually the fraud is happening is more like enough high values fraud, just like investment scam or impersonation. But as time goes by, that we also see that is a drastic shift of this landscape from the high value transaction to smaller one. The smaller one is small value fraud is mainly on the job scam or the purchase scam. So, and because at the same time we in the South, in some of the South Asia market, we also see that the country is also promoting that the using the instant pay, also more digital payment in the countries. So that's why in some of the South Asian market, we also see uprising of many small value scam is happening. Yeah.
Good. I want to know something. Can you hear me clearly?
Yes.
Yes.
Okay. Now, I have here a deep question related to this deep fake problem that is catching a lot of people by surprise, but it's coming. It says deep fakes appear to be part of our daily nowadays. It's everywhere. News, jokes, common communication, even communication among friends. The deep fakes appear. In particular with contents that we see online and social media. High-profile scams cases linked to deepfakes have been reported in the media. We have Hong Kong, we have a big case in Hong Kong of millions of dollars. But do you see deepfake or AI-enabled scams in your organization? And how prevalent are these scams cases in the financial market and their impact? I don't know who wants to go for it first.
Yeah, I'm happy to take that question. So yeah, you're correct, Mick. We don't need to look very far. If we open any social media feed, we see abundance of AI generated contents.
Mhm.
And AI has a dual nature, as you know. It has a transformative potential that can help advance society, for example, in science and fraud detection that we are speaking about, and other areas. But also it has a harmful side. Cyber criminal can utilize the same technology in a way to scam unsuspecting victims and deploy bots to test stolen credential and credit card details, for example. Also, cyber criminals have been using generative AI to step up their games, improving the quality and expanding the frequency of deepfake identities, selfie video, while also crafting highly convincing phishing emails, automating social engineering tactics, and even generating mass synthetic identities. As we have observed in our recent research, AI tools are widely used in onboarding processes. As much as 68% of attempted fraud involve digitally manipulated identity artifacts in our data in May last year. And this threat will continue as technology behind it improves.
68%.
Yes, during onboarding process.
That's quite high. Quite high. Elke, what you wanted to say, please?
Yeah, that is super high. Yeah, I think the most famous cases are where deep fakes, when we post something on the internet, and so the criminals have our voice. Then after that we speak, we say, I've been at this conference. Then they have our image, and then they have our videos, and so all of these tools can be used now, sadly, very easily to mimic what we could potentially say. And so some famous cases were where somebody was attending a board meeting, was called into a board meeting, and then the board told him to transfer, was it $80 million or something, to a certain account. And he came out of this video call and something was strange about it. And then so he just double checked it with his superior, and he was like, "What? You being pulled in a board meeting? Never! Like, why on earth?" And then it was exposed. But in this is something very serious, horrendously dangerous, that anybody of us can be a target. And so we continue to post about ourselves. The AI generated jokes are pretty funny, but the serious ones, you can just be such an easy target. And I think we need a very strong defense against that. Identity theft, for example, has been such a headache for so long and takes decades to clear. And I feel now we're living in the times where we're just openly every day can be identity thefted in many different ways, digital signatures combined with our faces and our voice. So it's very dangerous right now.
Vincy over there, Hong Kong.
Yep. So because now the banking is like everything is go online, right? So even for the customer account application, so here is the fraudster will use the different technologies to create the synthetic IDs in order to create open the account and enter to the bank network. As such that they will further use those accounts for the new activities. So that's why here is more like. So that's why I would say the deepfake is more impactful from the account onboarding pace, and then to maybe the controls in areas to be more stringent to prevent those fraudsters to entering to the bank account. Yeah, bank network.
Now I have here one short question. Says, could you? That was something that we didn't elaborate. Could you please explain what is the KYC?
Sorry, there was an interruption in your questions.
Yeah, yes, I repeat. Could you please explain what the KYC as a service package is?
KYC as a service package is, in a way, think of when you buy a package, like a package tour, when they basically guide you through and coach you through that process, rather than just buy fake identities and then you do it yourself. There is a process behind, there's a team behind it, there's a criminal organization behind that actually guide you through that process.
There's also another. Do you want to say something, Elke?
Yes, it's very very exciting in a way. So we also have these in our fraud cases where there were so many accounts being set up, and then there's lapses in the accounts verification. So all of these new accounts have been marked as low risk, so you don't need to do many things that you would do for high risk customers, and many of those could have been generated by KYC as a service, because these the owners also look pretty fake.
Okay. Okay, good. I have another one. I think this one will be, let's see, says, how is the risk of onboarding fraudulent accounts balanced with increasing friction of withdrawing cash? I think, in other words, we want to onboard the person, but then at the same time, they want to execute transactions right away.
Yeah, so there are a few ways to look at that. So of course, in the old days where you receive an email or a OTP to authenticate, for example, but a lot of regulators have already mandated company to move away from clickable links in SMS and email, for example. So there are different ways. So there are a few steps. The first one is your digital footprint. So when you actually create a new, let's say, you create a new account. If it's a fraudulent account, if it's a fraudster that actually use stolen credentials, they are familiar with the process. So in the way they create accounts, very different from a genuine user. When I need to think of a password, when I think which email I have to use, type in the name and so on. So that onboarding process is different. So the behavior is already different. The second is the footprints. Is the digital footprints. When we look at the digital intelligence, is that do we have seen this email address being used somewhere else? Have the email address, phone numbers, device been taken over by fraudsters, for example? So that's the digital side. And the third aspect is when you actually look at authentications, when company need to authenticate using deepfake detections, using document authentication, and so on. So there are a few steps that can be considered to make the KYC process a bit more robust.
Do you have any opinion? Yes, please.
Yep. So one thing to add is because in the onboarding journey, so I think, of course, the customer want to have a very seamless journey. So that's why we also don't want to create too much friction to them in the journey. But the thing is saying that whether or not those are newly joined customer are safe to the bank. It is also our question as well. So because we also see some situation is the fraudster enter to the bank network and then pretend to be a good customer. And then do the transaction for several times, maybe few months or maybe even 1 year. And then suddenly they try then start the new activities, or maybe they will also sell the account to the fraudster to use that as well. So that's why it is about even after we have control in the KYC, but at the same time, when the customer newly on the board customer to the bank, we will also like to have some attentions to those accounts and their behavior at the beginning.
Good. Yeah. I have another question here. It says, as data privacy requirements across Asia become increasingly stringent, how are organizations adapting their cross-border collaboration and data sharing approaches to combat international fraud networks? And what new opportunities does this create? I think this is you, Tai Vo, because you mentioned something about collaboration. Please go ahead.
All right. Yeah, I knew it, Mig, that this will come to me. Yeah. Yeah, I mean, fraud is borderless, as we know. I mean, it may sound like a cliche, but it's very much a reality that we're facing. So while businesses must comply with, let's say, local laws, regulations, cyber criminals can operate in any jurisdictions. And the physical or political boundaries is not a barrier to them. However, authorities still operate in a local context, and this local approach does not deter cyber criminals. An example that Elke mentioned is already, for example, is often illustrated at this point is the emergence of scam centers in parts of Myanmar and Cambodia. Cyber criminals in this center scamming victims around the globe, not just within their own country. And strengthening cross-border coordination is essential in disrupting this cross-border network. It's also require enhancement of the regulatory framework to encourage private company to share fraud intelligence. And some regulators are taking steps, taking steps to make this happen. And lastly, also the challenge is how to keep the intelligence up to date and the format consistent so that members can leverage the intelligence and act faster when threats are identified by participating member. And this is the concept of consortium that I have discussed earlier in the presentation.
Indeed. So if I chip in from our perspective, so we're glad to see that countries like Singapore, and I think Malaysia now as well, has set up scam centers within the police force, and bankers are actually mandated, I think, to sit in these anti-scam centers of the police. And so that when a scam happens, then very quickly, without sort of court orders and subpoenas and so on, the police has access to bank transactions. And it can be like payments can be stopped and something can be done about it a lot faster. I think globally for so many years, we have tried to work with Interpol and with other organizations, UN and so on, that were initially set up for cross-country collaboration. However, the public-private partnership that we discussed for so long, for decades, is I think still not yet in operation. And so countries like Singapore do it on a smaller scale within this region here. And I think is very effective. So I'm hoping that other regions would also adopt this. I can only speak from my country, Germany, where there's the regional, the federal, the county, then the federal, and so on. That it needs to cascade all the way up. So you have about 10 steps before it gets to the federal level, and everybody needs to cooperate in terms of data sharing until it can be shared internationally. So many countries have severe problems, I think, in their country structure, but smaller countries can act a lot faster. And I'm hoping that larger countries will sort of try and adopt at least the structure.
So we also see that the collaboration is very important. So as what mentions, the consortium is also one of the key that can help us to expedite the exchange of between different banks. So it's say that when we see attack in one of the bank in the market, as time go by, it will soon gradually to shift to another bank very soon. So that's why if the time is sharing of those intelligence between the bank, it will also really helpful as well. Yeah.
This collaboration is led by the banks, or do you think the regulator will have an input here? What do you think, Tai Vo?
Yeah, I think, regulators are agnostic in many ways. So when they look at a consortium or any kind of collaboration, is whether that's in compliance with the regulatory requirement and regulatory framework. So we work within those parameters to make sure that the banks are sharing data within those frameworks. As I mentioned before, some countries or some regulators are a bit more advanced in terms of creating this kind of environment, collaborative environment. Some countries are a bit more restrictive.
Yeah. Now, we have one question here online. It says, let me see, a short one that says, would you say digitalization of payment is more of a boon or a bane in light of the increasing fraud?
Well, my personal view, it's an opinion question, so we don't have much statistics to fall back on. But we are all very problem aware, and but still, the crypto market is 3 trillion. The global import-export market is 20 trillion, and so on. So there's, I would think, the majority of transactions is fairly clean. And so the digitization is a huge help, but we just have to manage the downside a lot better and catching up faster to what the fraud tactics would be.
Yeah, in many ways, it's, you know, when you implement new, whether it's a commercial channel or the payment methods, is the best way to describe is learn to walk before you run. So a lot of organizations, they see new toys, they implement it without understanding the risk, and then basically fix the problem later on. So I would say, look at from that, learn to walk before you start running.
It happens with the AI implementation. Go slow.
Very fast.
Yes,
Yeah.
go slow. Now we have. Let me see the time. I think we have one or two more questions to go. I have one here, please. The shift from third-party fraud to authorized payment fraud, such as money mules, investment and romance scams, have fueled record fraud losses in the region. A lot of single people here, okay? How can organizations defend themselves against these deceptive social engineering tactics?
Yeah, I think that one is all in the transaction monitoring. So initially, we're working with scam victims of investment scams, and they lost. It's thousands of people, and the amount lost is close to $1 billion. And so yes, it was all authorized, but the stories that they were given are we're the exclusive retailer, and now there's a bond share split of and sort of fake complex legal sounding reasons why they needed to transfer some more. And but from the bank's perspective, I think you can initially the first defense is to do a very standard proof of address, like a legitimate proof of address, no fake documents. And then later on in the transaction monitoring, seeing the patterns. If you have like an electrical company that all of a sudden has from no transactions to many in and out transactions, same day transactions, I think those are almost classical ones, and they need to be picked up by the transaction monitoring system. And even these transaction monitoring system now need to catch up with AI a lot faster as well. Like we programmed into our software like AI models in order to detect just from the company setup what could be a money laundering network. And so it is possible. And I think more investment just needs to be done in this kind of very deceptive environments.
So I think we have put many emphasis on the detection point of view. But I think what the thing is, I think the more proactive takedown of the mule or the fraud level is also matters, because it is saying that because it will, I would say, for every time we protect customer, the fraudster will always come back. But the only thing we can stop it is to take down the level. Yeah.
Thanh Tai Vo, you want to add something?
Yeah, I think just to add on to what Elke and Vincy mentioned is that, of course, as we know, online fraud has become more complex and sophisticated. So using a singular approach in fraud detection is no longer adequate. So one approach cannot cover all possible different types of fraud, as I mentioned before. The risk signal from a credit card fraud to authorized payment fraud as investment scam is completely different. And we help clients deploy a multi-layer strategy, as I mentioned before, that analyzes the fraud risk from multiple angles, like looking at digital intelligence, basically the digital footprint of that event or transaction, defect detections, but also looking at beneficiary, essentially validating that you are not sending money to a scam account, for example, and analyzing behavior that when you interact online. A human behave very differently from a bot, but also a human under stress behave very different from the historical profile of that user. So we look at multiple touch points to actually look at whether these victims are being scammed or not.
Yeah, I think the time from payment to execution is minimum. Before there were some steps in between where you can detect some anomalies in the process, but now the moment they execute the payment, just that's it. This time, I don't know what computer system we're going to use, but how can we manage that fraction of time? Do you have any opinion about that?
There would be the option to copy the crypto market. So they have this travel rule. And so basically before you send money, you need to have KYC'd the recipient. And I think banks also should adopt this a bit more, like where is this going to? And is there, can we share like a KYC file of businesses, for example? and where somebody has done somebody reliable and trusted has done some KYC on specific businesses to transact with, or at least in that country or something. So it could be organized, I think, to KYC the recipients first.
What do you think, Tai Vo?
Yeah, the travel rule. I mean, there's equivalent on the banking side. As you know, when during the presentation, I mentioned about look at the beneficiary insights. So normally, when you actually do a transactions, we looking from the perspective of the sender. We try to protect the sender, but also it's good to understand where the money is going to, right? So if that account has already been flagged, that's easy. That's very that's more straightforward decision. But looking more, let's say, contextual data, even though that account has not been flagged, but we see that a different device is linked to that account or to the bank account, or different devices being used multiple times, for example. So that's all this risk signal will provide a more robust assessment of the association between the two transactions, right? Sorry, the two parties, rather than just looking from a singular perspective.
Vincy, you have an opinion on this?
Yep. Yeah. So I think if we just take a look at single beneficiary, maybe we just have a very limited information. But as long as the bank is already many customers may have a connection with that bank, so that's why we can also base on those information to build up the trust level of the beneficiary, as such that whether or not next time when other customer try to send the money to this beneficiary, whether or not it is still a safe transaction to go. Yeah.
Okay, we are running out of time. In fact. I don't know if we have one last question from the audience. I don't know, Tai Vo, do you have the chat box there? Because we have 3 that just arrived.
Mm-hmm.
And if you have any preference.
No, on the checkbox or on the chat, because the two...
chat, not in the Q&A, but in the chat box.
Okay, in the chat box.
There's one: how are regulatory and technological developments impacting fraud risk in Asia? So we haven't discussed the regulatory side yet. And so how fast are regulators keeping up with the fraud landscape, I think is the question.
I tried to go there a little bit.
Yeah, I mean, if you look at the regulatory landscape in APAC, it's not uniform. I mean that should surprise you. So we do have regulators are more proactive in the case of Singapore, Hong Kong, to a certain extent Australia, and so on. But there are regulators that are less proactive. As we speak, actually, Cambodia just issued new online scams regulatory requirements. So that is already, but they are 3 or 4 years behind in a way in that process.
Yeah. Okay. So now to conclude the session, I don't know if each of you would like to say something that is of value to the audience. Besides this long conversation, which is very valuable, I think.
I think we all need to pay bigger taxes so that the regulators can be funded more and can respond faster.
That's the German approach.
Right. More
taxes. How about Vincy over there in Hong Kong?
Yeah, so I would say the collaboration is really matters, because it is also the matters of the collection of the intelligence and the timing. We are able to exchange the intelligence quick enough, as such that we are able to tackle or take down those fraud and level quicker. Yeah.
Good. Tai Vo, please.
Yeah, I would certainly agree to what Vincy mentioned. Collaboration is important. So different levels of collaboration. So where basic is sharing, for example, devices all the way to actually account level. So that really depends on the comfort level between different members and within that fit within the regulatory framework of that jurisdiction.
I think this is such a valuable discussion to have, is sort of what can one do for digital online AI kind of based fraud and crime. We need definitely more of that. and we need faster responses, more technology, smarter technology, using AI also to detect things, not just to generate problems, but also to fight problems. And so that we mustn't forget, sort of, despite all the efforts, that there's actually victims of this that get defrauded, and that what we see is like they're suicidal, they have lost their marriage, they have lost their homes, and just because they wanted to do a small investment of 50,000, and then by using pressure tactics and legalese kind of language and fake videos of the Deutsche Bank chief calls you directly and things like that. So it's the impact is severe, and also the money flow from like the $3 billion that get fraudulently pocketed by individuals in the end. It's just too much money in individuals' hands. So I think we need to be all very alert and give our best to combat.
And with that, my friends, thank you very much. See you next time.
Thank you, everyone.
Thank you.